Banks, building societies and credit unions. Explained. In this video, we're going to look at what is the difference between a bank, a building society and a credit union. Those financial institutions that people sometimes find difficult to understand. So firstly, let's look at the ownership type and where do the profits go, because this is a main fundamental difference between a bank, a building society and a credit union. So in a bank, as you can see there where it says TSB, they tend to be privately owned by shareholders. Shareholders will buy shares in the bank, and as a result they will want a return for their shares in the form of a yearly dividend. That is a share of the profits. The bank will make its profits from its customers, so the people that lend money from the bank, and also the people that buy services from the bank. So that is their main focus. In the middle, we have our building society, and here is the main difference. Unlike the bank, this is owned by the members. So every single customer is a member of the building society. All the customers, all the members get one vote, and they get a share of the profits at the end of each year. So they get to vote on how the organisation is run, but they also get a share of the profits, which is normally called a reward or a bonus at the end of the year. Now this slightly differs from a credit union because they tend to be run by not-for-profit organisations or charities or community groups, for example. In these, every customer gets a share in the organisation and gets a vote on how it's run. They also get to say and suggest ideas how it can benefit the local community they work in. But unlike the building society, the profits don't go back to the members, they get reinvested back into the credit union, allowing it to offer loans at a lower rate. So what about location? How does that differ? Well, your banks tend to have a large number of locations all over the UK. That for the customer means they get easy access to money regardless of where they are. Where building societies tend to be located regionally across the country. This can actually limit the access if you are needing access to your money quickly, for example, and you're not in the location you normally are. Because in a bank, you tend to be able to go anywhere and find a local bank. Where a building society, once you step outside that regional location, you're going to find it difficult to access your money. The credit union tends to be located even more tightly knit in local communities. They could be run from a community group, for example, or from a church building, or maybe in a school building, and they have very restricted hours. So that's going to limit the access that you get. And obviously, because of those restricted hours and those specific days they open, that's when you'll be able to get access to your money. So what financial packages do they offer? Well, the banks tend to offer a wide range of accounts, including savings accounts, current accounts, loans, mortgages, insurance, and many other financial packages. There is no doubt the banks offer the widest range of products, whereas your building societies tend to offer a limited number of accounts, typically specialising in savings, loans, mortgages, and they sell some type of insurance. However, many building societies don't offer a current account. They specifically focus on savings and trying to lend for mortgages. Now your credit union is even smaller still. That will offer a really select number of accounts. They tend to specialise in offering savings accounts and loans, and the loan amounts they offer are much smaller. So the banks will tend to offer large loans, just like the building society will in the form of a mortgage. You would not be able to get a mortgage from a credit union. So how do you access your money and how does that differ? Typically, the banks will provide a debit card, and that's going to allow access from cash machines and branches all over the UK. In fact, you can use nearly any cash machine that you would find because the debit card will work across that link network access, as it's called. Building societies, on the other hand, tend to use a passbook, which is how you get access to your money. A little book that you hand over to the counter, they stamp it and they give it you back. So the money can't be normally withdrawn from a cash machine. It tends to come from the branch. So again, it's more restricted because you've got to find a branch of that building society to get access to your money. Now, credit unions typically have what they call a logbook, a bit like a passbook really, and that's used to record the transaction. So any withdrawals will have to be in cash, but if you're going to pay off a debt, for example, it gets recorded in that logbook how much you paid back, and you can clearly see what you're doing. But again, you've got to go to the credit union on those set days. So again, much more restrictive than the banks. And finally, let's have a look at what protection do they provide. Well, actually, all of them are the same. Every single one, a bank, a building society and a credit union, offers protection on your savings, guaranteeing them up to the value of £85,000 under the PSHE rules. If you're not sure what that's all about, I have a video on that explains how those rules apply, and what it basically means is that your savings are going to be guaranteed up to £85,000. So if the bank, building society or credit union was to go bankrupt, the first £85,000 of your savings would be protected. Okay, hopefully you now have a better understanding of banks, building societies and credit unions. Ideally, you'll now be able to answer the question, if I posed it, what are the similarities and differences between a bank, a building society and a credit union? If you can answer that question honestly, then you understand this topic. If you're still unsure on that, maybe go back to the video and watch it again. That'll probably help you to understand the difference between these different organisations. Make sure you click the subscribe button down below, and until next time, keep buzzing.